if you want to get into finance, try and get your basics right. So for example, do something, read something or study a course which gives you some insight about finance. So
Yes.
for example, courses like CFA and FRM. But let's say if you want to get into a function like product control, valuation control, risk,
Right.
a course like FRM will really help you.
Okay.
Like CFA is something which is like a very
Generic, yes.
generic, broader course, so that will help you in a lot of things. But if you specifically are looking for something like valuation control or risk, let's say, or even product control, FRM will be very, very helpful for you because.
Now, one more question connected to the career in valuation control. Generally, what is a career path that it looks like for in that team?
If you look at valuation control in general, I think the team is very diverse and very, deep, with deep knowledge. So you start as an analyst and you can become an MD in valuation control. I'm typically talking about multinational, banks, how their structures are, right?
What does a product control do, and how a valuation control is slightly different from that?
The way these two functions sit within a bank are slightly different. So product control is largely aligned to the front office desk who actually trades them.
Okay.
So the work of product control is where the desk will have certain instruments. The front office desk that trades derivatives will have instruments on their books.
Suppose you want to hire somebody, or any new person who wants to join. And I'm talking from the fresher perspective. Somebody who's already working will have work-ex to show. Fresher, what are the basic skills that you look for? Hello guys, I hope everybody is doing good. Hi, this is Ganesh Nayak. I help finance professionals and students to excel in their career and become a better version of themselves. And I also help students preparing for competitive exams in finance like CFA, FRM, and SCR. And as a part of that journey, we also get people from the industry to talk about different roles in the industry. And today we're going to be with somebody who has already spent so much time in valuation control, and he's going to be talking about his journey of being in this industry. So Gaurav, thank you very much for taking out time and talking to us.
Thank you Ganesh for having me.
एक brief बता देंगे अगर आपकी जर्नी कैसी रही है?
Yeah, sure. So एजुकेशन में मैंने पहले इंजीनियरिंग और MBA किया था. उसके बाद I passed out in 2009, which was not a very good year to pass, because of all the financial crisis and everything, right? So we were very short on companies in the campus. So मैंने एक public sector bank join किया था through campus, which was a very short stint for me, for like 6 months. उसके बाद I was looking for something more fulfilling, more aligned to my skill sets and what I wanted to do. So I got an opportunity to work in valuation control for one of the leading, multinational banks.
Okay.
And that's when my journey in valuation control started. It's been about 16 years now. I'm still in that function. I'm still working in valuation control. Okay. Obviously, I have switched a couple of banks during that time, but still a part of
the core role has been valuation control.
Yes, the core role has been valuation control for me.
Okay, so I have few students who come from background of product control.
Correct.
And for the audience, if you can just give a brief, what does a product control do, and how a valuation control is slightly different from that?
Sure. So in essence, the skill sets required for product control and valuation control are very similar, because typically both of these functions are with respect to analyzing the derivative instruments that you have within your bank, right? But the way these two functions sit within a bank are slightly different. So product control is largely aligned to the front office desk who actually trades them.
Okay.
So the work of product control is where the desk will have certain instruments. The front office desk that trades derivatives will have instruments on their books. They would want to know how the MTM, the valuation of those instruments, have moved.
Okay.
So product control, what they will typically do is analyze those instruments, look at the MTM, come up with attribution for those MTM. So for example, let's say 100 रुपए का MTM अगर किसी ट्रेड ने जनरेट किया, तो out of 100 rupees, 80 rupees is coming from market movement, 5 rupees is coming from new trade, or something like that. So overall breakup of your total MTM, right?
Okay.
That is what product control does. Valuation control is more of an independent function, independent of front office. So typically what happens is that when you have instruments which are not publicly traded in the market, right? So most of the derivative instruments that we talk about these days are not traded on exchange. They are largely traded over the
OTC.
counter. They are OTC products, right?
Hmm.
So there isn't a very specific fixed price or fixed place where you can get their prices, right? So to understand like what is the correct price of that instrument, what is the fair price of that instrument,
Right.
is slightly difficult, right? And requires some kind of understanding of how the valuation of those products are driven, what kind of models are required to value those products, right? So that's the job of valuation control, where you essentially try and understand what is the fair value of a product, which can be different from what the traders are giving you, what the system is generating as a MTM for your product.
So kind of a control function sitting in finance,
Yeah.
making sure that whatever numbers we see in the system, which goes to the books, are correct.
Absolutely. So the way typically it works is there is a system generated number that will automatically flow to book. Obviously, all the organizations are enormous, right? So
Right.
everything is automated. And then on top of that, valuation adjustment will typically take some kind of adjustments. So let's say if the valuation flowing from the book is 100 rupees, and after analysis, valuation control comes to the conclusion that the overall valuation is not 100 but actually 95. So there is a 5 rupees gap. So a 5 rupees adjustment will be sent to the books. So overall, your books will say that 100 rupees flowing from system, 5 rupees flowing from uh, valuation adjustment, and then 95 is your overall valuation.
So everything in the book has to be your numbers.
Correct. So eventually what gets reported is essentially the valuation control number.
Okay. Now, I'm just going deep into the role, trying to understand. Suppose a trader has done a trade for an OTC swaps.
Right.
Okay. Post the affirmation, confirmation process, it comes to the operations team.
Correct.
And side by side, there is a product control team who will do the valuation. And they are not only doing the valuation for this trade, but all the active trades.
That's right.
On a continuous basis.
That's right. Yes.
Okay, so they are doing the valuation, and after that, what happens when they can't do the activity?
Correct.
When do you step in?
Yeah.
Is it after that or after some months?
So maybe let's look at the entire trade life cycle, right? Yes. So the things that you mentioned, like trade confirmation, putting the trade in the system, those are all pre-trade activities, right? So once a trader locks a trade with a counterparty, right, there'll be a sheet generated which will have all these details. It will flow to the operations team, which will eventually put those put those details into the system, create a trade, right? Then also by this time there'll be a risk team that will come into picture to understand whether the trade that's been captured has all the risk parameters that they understand, or does it have something new, right? Like if there is a complex trade, then maybe they will have to understand that what are the risks that are coming, right? But let's say once all of those things are taken care of, now the trade is in the system, the trade is live. So there is a MTM generation that will happen on a daily basis, on a day-to-day basis, right? So the product control role is on a day-to-day basis, whatever the system generates, the MTM for one particular trade, along with all the other active trades, they will look at the MTM breakup, the attribution that we typically call it in the language, right? And they will send that to the desk with the explains that this is coming, let's say X amount is coming from market movement, Y amount is coming from new trade analysis, Z amount is coming from time, because of passage of time and all that. And they'll get a sign off from the desk, and that is the desk MTM that will be finalized in the system. Now what typically happens with valuation control is once all of these things happen, now before I go further, I'll want to make it clear that earlier valuation control activities used to be a monthly activity, the adjustments. But now some of the activities are also run on a daily basis, as technology is evolving, as we have better systems in place where we can do some kind of automations. So a lot of things happen on a daily basis, but that is more like a FYI kind of thing, which we'll run systems, our processes on a daily basis, come up with some adjustment, send it to the desk for them to see that how far they are from the market. Right? But what eventually goes in the books is typically on a monthly basis. So month end cycle is very important. So let's say 30th
Right.
is the end of the month. So valuation control will take the population as of 30th of the month, right? And then analyze all the trades, put the models in, put their own independent variables, market variables into the system, value everything, value
Okay.
all the trades at valuation control side,
Okay.
and then come up with another MTM, which is a valuation control MTM. So difference between what the desk is giving you versus what
That
you
is the
are,
adjustment.
that is the adjustment that you have got. And then again, there are a couple of different things. One thing is called pricing adjustment. Something is called as valuation adjustment. So when you're looking at the fair value of the price of the instrument, you're essentially looking at two things. One thing is at what value you can trade the instrument, and the other thing is what is the inherent value of that particular trade. Maybe your trading could have happened at a different price, right? The concept of being overpriced or underpriced.
Right. Price slippage
Yes,
could also be.
exactly. So price could be slightly different, but the inherent value comes from a few things. So typically two very important concepts in valuation control, which is pricing adjustment and valuation adjustment. So
Okay,
then
okay.
at the month end cycle, we will do all this. We'll calculate all these numbers, send these numbers to middle office, who basically takes care of product control, also product control
Right.
and middle office. So they take care of all the adjustments that's been booked in the that
That
finally
will
flows
basically
in the
go into the book. So now over here, the way PC works, product control works, is that they might have a small team of 5-6 people working for one desk, FX desk.
Correct.
So or it's a IRS desk. Similarly, for valuation control also, you have mapping to the desk, or it is generic.
So typically it is mapped to the desk. The only difference is the valuation control team is typically very small, smaller, much smaller than the product control team.
Okay.
Because of, again, the way it works, because typically your product control team will have daily responsibilities, because they will have to get everything done, signed off by the desk on a
Right.
daily, day-to-day basis, right? But valuation control team is typically, I would say, maybe one third or one fourth of
The size, overall
team
size.
the overall team size.
Okay.
But alignment is very similar.
But the valuation control does not report to a desk.
No, it does not report to a desk. So actually, valuation control, like you rightly mentioned at the beginning, it's a control function which effectively reports to CFO.
Right.
Because CFO is responsible for all the books,
Right.
statements, financial statements. So it's a parallel line of reporting.
Okay. And when we are talking about OTC, so do they generally have a separate desk for exotic products?
Correct. So the way typically in banks it is arranged is like there'll be a line of business. So line of business will be more broader. Like for example, interest rate, then equities, then
Right.
credit, right? Then within that line of business there will be what kind of trades, and sorry, before that there is a regional, because most of these banks, let's say if we are talking about multinational banks, then they will have presence across
Yes, yes.
multiple continents. So typically that is divided into Asia Pacific, EMEA. EMEA is Europe and
Yes,
Middle
Middle
East,
East,
and
Africa.
Africa, and then there is North America, which typically consists of America and Canada and all these. But if it's an Indian bank, then largely the presence will be limited to Indian markets. So there'll be a regional, after line of business, there'll be a regional division. And after that, it'll be what kind of products. So for example, we talked about interest rate swap. So interest rate swap is typically considered as a flow instrument, which is standard instrument. We call it in financial parlance as flow instruments.
Straight through processing.
Yes, straight through processing, and relatively simpler in processing, right? Then there are other instruments which are like more exotics in nature. For example, swaptions, Bermudan swaptions, or yield curve spread options. So any trade which has optionality into it or
Right.
correlation built into it typically becomes very exotic, more difficult to price, to value, right? So those will be a different desk.
Okay.
So one line of business might have multiple desks. So for example, interest rate is one line of business.
Right.
It can have like 10, 15 different desks within
Sitting in different regions.
different region also, and different kind of products also. So there could be one flow desk, there could be one exotic desk, There could be one interest rate exotic desk, there could be one FX exotics desk, there could be one. Then similarly, so
Okay.
this what I told you is largely related to interest rate, but very
Hmm.
similar in, let's say, equities also. So equities flow or equities exotic. Now equities exotic will consist of all the instruments which have optionality built into it. So
Ah, okay.
those kind of things. Yeah.
And you separately also have a bond desk
Correct,
also.
correct. So bond, sometimes it's like a separate function, like a securities function, which will have all the bond instruments. But sometimes it's also a part of, let's say, interest rate desk, because eventually it's
Ah,
a
it
interest
is driven through interest rate. Okay.
driven.
Okay.
Driven. So these are slight differences that you'll find across banks,
Okay.
but largely the baseline will remain same.
Okay. Now, somebody who is sitting in the valuation control, he will look at the flow products also, the simple products also, and exotic products also when he is doing the value control.
Correct, correct,
So
correct.
there is no. So I'm just trying to visualize a person sitting in valuation control. He will be mapped to a product equity.
That's right. That's right.
So within that, everything he has to take
He
control.
has to take care. So now
Okay.
within that, it all depends on how senior you are, how much exposure you have,
Right.
right? So typically, when we start with new people, we would want them to look at relatively simpler products, right?
Hmm.
So that they understand the product first, then they understand how valuation control is required to look at those products, and then move towards more complex,
Okay.
product set. That's how we'll typically start with somebody who's a newcomer. We don't want to expose them to, like, let's say, a very complicated, let's say, a Bermudan product, right?
Hmm.
Because that will require a lot more understanding first at the product side, then as a valuation controller what you need to do, right? So to build the knowledge, to build the expertise, we would want people to start from
Okay.
relatively simpler products.
So now, if somebody wants to join a valuation control team, from which team it is more easy for him to come? PC product control is more easiest because they are basically
right.
control function. But apart from product control, do you see people coming from the core operation side and joining your team? Does that happen?
Yeah, so typically the majority of the movement that we see is from product control or from risk. So market
Acha.
risk also is one of the other function from where people join, valuation control.
Okay.
Because these three function actually work on similar baseline. So
Okay.
product control also works on, instrument risk. Valuation control also works on instrument risk, and market risk also works on instrument risk, right? So similarity in terms of what kind of numbers you're looking at, it is just difference from the viewpoint of individual roles. Like if you're a product controller, you're looking at the same data from a different angle. If you're a valuation controller, a different angle, and if you're from risk, then a different angle.
Okay.
But I have seen people joining from other functions also, like operations,
Operations.
or some other control function, like for example, financial control or legal entity control, or these kind of roles that exist within the
Okay.
bank. But numbers are fewer. Like you need to add certain things to your CV, certain capabilities in terms of understanding of derivatives and all those kind of things,
Right.
for you to be like more suitable for the role.
So, what is the basic skill set that you look for when you suppose you want to hire somebody
Right.
or any new person who wants to join? And I'm talking from the fresher perspective. Somebody who's already working will have work to show. Fresher, what are the basic skill set that you look for?
So two baseline things. One is comfortable with numbers, right? So you have to be very
Okay.
numerate. You should not be you should not be worried about the numbers, because we are looking at numbers day in and day out, like large spreadsheets or even system, a lot of numbers that you deal with. So you have to be very comfortable with numbers. And second thing is you should have basic understanding of derivatives. So how interest rate derivatives work, how equities derivative works. Let's say you should be able to understand what a swap is, what kind of things drive the valuation of a swap. What let's say there is change in interest rate, then how the valuation of the swap will change.
Okay.
So those kind of things. So these are two baseline. There is a new skill set that's coming along these days, which is more technology. But I would also say that I think that's something that is a nice to have still, but core skill
Product
set,
knowledge.
product knowledge, and you are comfortable with numbers is something that.
And when you're saying numbers, basically you're saying you have to handle numbers in Excel also.
Correct.
or it could be MS Access or whichever tool you're using.
Excel is like still the
Most important
most
tool.
important tool that we use.
Okay.
I mean, no matter how many systems come, no matter how many automations happen, you will always have to work in Excel, at least for the foreseeable future. So
Okay.
you have to have like good Excel knowledge, and Excel is something that you can learn quickly, I believe, and very simple to learn. So that is something that I think students should definitely look at.
But do you need accounting knowledge in your domain or role?
Not necessarily. I think having that knowledge helps,
Okay.
but for the core role, accounting knowledge is not something that you like really require. Product knowledge is something that will help you more. But if you have the accounting knowledge, then that helps you, because then you will be able to piece together everything that you do. Because one missing link that I see in youngsters joining, the valuation control, is they will do the work that's been assigned to them, but when it comes to understanding what is actually happening to those things, the numbers, the adjustments that you have produced, how it is flowing to the book, and all those kind of things,
Right.
that is where your accounting knowledge will
come into
picture.
And so these valuation control roles, one is investment banks where you can get that.
Correct.
Apart from investment bank, where do you see these kind of roles?
So again, investment banking, like you rightly said, is close to about 80% of what valuation control is confined to.
Yes.
But there are mutual funds, there are which have to go through this. So there was a very interesting incident that happened in like around 2012, called as London Whale. I don't know, people
Yes, I'm aware about it.
who follow finance will know. I'm sure you'll know. So that is something that
Okay.
kind of shook the entire financial industry, right? Financial landscape. This was after the 2008 crisis,
Yes.
right?
Valuation issue.
This
that
was
there.
very core to valuation control. So London Whale is something where one of the leading bank traders was kind of getting into a trade. He got very aggressive while getting that trade, right? And there were some valuation issues with that, and there was no check, there was no control check.
Okay.
Because again, if you're the person who is doing the trade, and if you're the person who is putting the value of that trade in the books, then where is the check, right?
Right. Okay.
If as a trader your incentive is on how
much profit you're books
showing,
you're showing more
profit, then you have to have a certain kind of independent check on what you're showing in the books,
Right.
right? And I'll not go very deep into that, but that's what basically caused London Whale, and it costed the bank a lot of money. So that's when the importance of valuation control actually came into limelight.
But before that, there was a team.
There was always, yeah. So
But
the
the
valuation
role
control
improved.
team, I think it started coming into picture late 90s,
Okay.
but it wasn't taken very seriously, I would say. I mean, to put it slightly harsh way, right?
So now the importance increased after that
Yes.
incident and all.
After that,
All the banks started having
all
a
the
good-
banks and every institution where you have these kind of trades, like insurance, right, or funds, they will also get into derivative trades to hedge their risk, right?
Okay.
So hedge funds are there. So what will happen is that for them also it becomes important. But only challenge with those kind of banks are, those kind of firms are like hedge funds and all, is that they don't have a large team at their disposal, right? Like investment banks typically have their own in-house, valuation control team.
But these companies then would outsource this.
Correct. So there are certain companies which take these kind of roles for funds and all,
Okay.
and do valuation control for funds. So it's more like not an in-house team, but a third-party team which does it for multiple funds. So that's also actually a good place to start,
Yes.
because that gives you a very broad understanding of how this function works. That gives you the required skill set, the required experience of a couple of years. And then once you have that in your CV, once you have that knowledge, then with that you can, get into
Investment banks or other companies.
Other
Okay.
companies. Yeah.
Now you talked about technology. So any specific skill set that youngsters should have if they wish to enter into this area?
I think it's a bit evolving at this point in time, but still, how it is looking right now, and maybe not a long time, but maybe 3-4 years in the future.
Hmm.
I think Python and Tableau are two of the skills that will help students a lot.
Okay.
So Tableau is something which helps you visualize the data.
Right.
So till now we have been using pivot tables in Excel and all those things.
Right.
But that has now, so you see pivot table into 10 is basically what Tableau is. So you have to get data from multiple sources,
Right.
and you put it in one system and then create dynamic dashboards and all. So Tableau becomes important.
Okay.
And then Python becomes important because of the because Python is very, very flexible in terms of how it can be used. So
Okay.
and also with the advent of all these no code tools and AI tools which help you code.
Right.
So it's not that, I mean, typically a lot of students who are not from technical background, they get very worried when they hear about coding and all,
Right.
right? But you don't really have to become a software
Expert,
engineer,
right.
or you don't have to become an expert in coding. You're not getting into a coding role. What you need to know is just basics of how to fit code into a system, like how to run a code.
Right.
If you know that, and if you know certain prompts, you have tools available today which will write like all the lines of code for you.
You should at least be able to read the code also. No?
Correct. You should just be able to understand the code and know how this code fits into the system, how to run this code. If you know this much, I'll tell you that you're better off than 50% of the people at this point in time. And that
Wow.
is a huge skill set. I mean, going forward, I think 4 or 5 years down the line, all the roles are going to change because of how technology is evolving. So if students just pay little attention, not get worried, just pay little attention
Towards the coding
towards
side.
the coding side, let's just gain a little bit of understanding. I don't think there is any dearth of knowledge.
So many people on
Yeah,
YouTube are
on
teaching.
teaching about it, right?
Yeah.
And so many free courses available.
Yes.
So maybe just spend a little bit of time. Doesn't require it's not
Yes,
a rocket science. Doesn't
Perfect,
require
yes.
a lot of effort, right?
Now, one more question connected to the career in valuation control. Generally, what is a career path
Correct.
that it looks like for in that team?
Right. So if you look at valuation control in general, I think the team is very diverse and very deep, with deep knowledge. So you start as an analyst and you can become an MD in valuation control. I'm typically talking about multinational banks, how their structures are, right? But and so you can spend like a good 20, 25, 30 years growing in the valuation control organization itself.
Okay.
It is that big and that important in the whole scheme of things, because like I mentioned earlier, eventually the valuation control reports to CFO, right? So you have like very, very senior people leading the global valuation control function. They are like tenured MDs, like MDs for last 5 years or 7 years leading the valuation control function. So very large scope of growing within the valuation control scheme itself. But then again, let's say, for example, if you want to move to different function,
Yes.
then we already talked about product control, we talked about risk. Like these are two other functions
Where you can move this.
where you can move, where your skill sets that you have like learned in valuation control will come in very handy, right? And then or if another function is basically control function. So like a bank has a lot of control function, like there is financial control, like we have product control, we have valuation control, there is financial control,
Yes.
and risk and a lot of other things. So control functions is another function that you
Okay. Okay. When you generally take interviews of people who come to this role, what is one thing that you look for in that interview?
So apart from the basic understanding of products and knowledge, one thing is definitely one other skill set that I would want to mention at this point is attention to detail. Because the kind of role this is, it's a very intense role in the sense that you're responsible for the numbers that are flowing in the bank's book, right? So you cannot afford to go wrong over there, right? So attention to detail is one personality trait that that we would really want to have in people coming into the team. And then again, beyond that, I think just sincerity. I think just be sincere to your work, right?
Yes. Yes.
Rest of
Very,
the
very
things,
important skill.
very, very important. I think rest of the things, there are a lot of things that you learn on the job, right? Everybody who starts a job on the first day, they don't know a lot about what they're going to do, right?
Yes.
And what they are supposed to do. But there is a whole team, right, to guide you.
Yes.
You will learn a lot on the job. I mean, once you join today, let's say for example, the next 6 months is going to be a great learning curve for somebody who joins the team, right?
Right.
So a lot of things can be taught, but some of the personality traits like sincerity, attention to detail is something that you need to build from within inherently.
Yes.
And that'll go a long way. It'll always stay with you.
Definitely, definitely. Now, one question which has 2 points. First is what is one advice that you would want to give to the upcoming people who want to get into finance,
Right.
okay, general finance, okay? And what is one good advice that you have got in your career which has changed your career?
Right. So something that I would want to give to youngsters today is that try to declutter all the information that you have. I know it's easier said than done, right? So first thing is that if you want to get into finance, try and get your basics right. So for example, read something or study a course which gives you some insight about finance.
Yes.
So for example, courses like CFA and FRM, right? If let's say if you're MBA finance, let's say for example, or a CA, right, you have a different understanding of things. You have been taught things in a slightly different way. But let's say if you want to get into a function like product control, valuation control, risk,
Right.
a course like FRM will really help you.
Okay.
Like CFA is something which is like a very
Yes.
generic, broader course. So that will help you in a lot of things. But if you specifically are looking for something like valuation control or risk, let's say, or even product control, FRM will be very, very helpful for you because it'll prepare you well for the baselines, right?
Yes.
You will understand the risk, you will understand
The product understanding becomes very good.
very good, and that is a very good skill and a quality to have at that point in time. So take care of that, I think. Yeah, and if you do that well, I think for an entry level role, that helps a lot.
And what is one good advice that you have got and which has changed your career?
That is actually too many advices I have got over a period of time. But something that I feel is that you have to be slightly patient, right? Knowledge, skill set is something that you have to gain all the time. You have to look for the opportunity to get all those things as much as you can from your surrounding, from your work. But you have also have to be patient and willing to understand yourself, that what is it that you want out of your career. Like there is a lot of noise around us, right? With so many videos being thrown at us, right?
Yes. Peer
pressure, right? This person is doing this, so I need to do this. Somebody said that this is good, so I need to do this. But you have all the information available in the world, so just try and understand like what is good for yourself. This is what somebody told me earlier, that you need to understand yourself, that what is it that you like, what is it that you want to do, because it happens in your career. Once you're doing certain thing for a certain year, you get a little restless, and then you think that okay, fine, what you're doing is maybe not good enough for you, and you want to do something else, right? You want to switch paths, which is okay. I mean, it could work for somebody, it could not work for somebody. So first, I mean, just sit down, relax, and think that what is it that you want to do. And once you have that clarity, then I think a lot of doors open for you, a lot of clutter goes away from your mind.
Yes. Wonderful. Thank you again for taking out time, Gaurav. It was great talking to you, and I am sure this conversation is going to be really helpful for the new guys, new students, candidates who are looking to enter into finance, and they will come to know about this particular team, this particular role,
Correct.
and they will take a good decision in their career.
Thank you.
So once again, thank you very much.
Thank you for having me. I hope what I said is helpful for your students. So really, thank you.
Thank you.